Ever wondered what Wall Street whizzes are actually doing when they buy and sell stocks? Or perhaps you've pondered over how the stock market operates. Today, embark on a journey to unravel the mysteries of the stock market. Imagine a bustling marketplace, but instead of fruits, vegetables, or clothes, this marketplace trades in shares of public companies. That, in essence, is the stock market. A stock represents a tiny piece of ownership in a company, and the stock market is the grand stage where these pieces of ownership are bought and sold. So how does one navigate this marketplace? The first step involves a company deciding to sell its shares to the public. This process, known as an initial public offering or IPO, allows the company to raise funds to grow its business. Investors purchase these shares, betting on the company's future success. After the IPO, these shares are freely traded on the stock market. Investors buy and sell stocks based on their predictions of a company's future performance. If an investor believes a company will do well, they may decide to buy its stock. Conversely, if an investor thinks a company's future looks bleak, they may choose to sell its stock. The price of a stock is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell a stock than buy it, the price goes down. This constant ebb and flow of buying and selling, supply and demand, is what makes the stock market so dynamic. Now, where do these transactions take place? They occur on exchanges like the New York Stock Exchange or the Nasdaq. These exchanges act as intermediaries, ensuring that trades are carried out fairly and efficiently. In essence, the stock market is a complex network of buyers and sellers, all trying to predict the future. It's a place of risk, but also a place of potential reward. It's a place where fortunes can be made, but remember, they can also be lost. So, to summarize, the stock market is a marketplace for buying and selling shares of public companies. It starts with an IPO, where a company sells its shares to the public. After this, the shares are freely traded based on predictions of the company's future performance. The price of a stock is determined by supply and demand, and all transactions take place on exchanges like the New York Stock Exchange or the Nasdaq. Remember, investing in the stock market isn't a guaranteed way to make money. It's important to do your homework, understand the risks involved, and if possible, seek advice from financial advisors. But who knows? With careful planning and a bit of luck, you might just hit the jackpot. This concludes today's exploration of the stock market. Keep these key points in mind, and perhaps the next time you hear about the stock